Thank you for watching this video. Today we will be doing technical analysis on the stock market for Thursday, December 10th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. The S&P 500 was down 13 basis points today, and we closed at 3668.10. The first chart that we're going to look at is a 4-month daily candlestick chart of the S&P 500, so each candlestick does represent 1 day of trading. This horizontal blue line is set at 3600, and the uptrend line here, this one here, let's start here. We broke that to the downside on yesterday, and then of course we closed slightly below that again today. So this momentum, this trend that was in place starting about the middle of November, that has now been broken to the downside over the last couple of days. So we've lost some momentum in these markets. The only question becomes here, is this a trend change that's going to last for several weeks or longer, or is it just a pause that refreshes that will then allow the market to go higher through the end of the year? Only time will tell, but I think from a psychological standpoint, as long as we stay above 3,600 on the S&P 500, I think we're fine. So just kind of keep that in the back of your mind, but you know, a lot of times these round numbers really do play into the psychology of investors. So as long as we continue to close above 3,600 on the S&P 500, I think we're fine here, but we have broken this uptrend over the last couple of days. So, you know, the price action over the next few days and few weeks is going to be quite critical. But again, as long as we stay above 3,600, we're probably going to be okay. The next chart that we're going to look at is for the Dow Jones Industrial Average. For those of you that like to follow the Dow was down 23 basis points today, and we closed just under the 30,000 level at 29,999.26. The 30,000 level is this blue line here, and of course the first day that we ever closed above 30,000 was back on November 24th. Very historic day for the Dow, and we've been in a nice little uptrend on the Dow since about the middle of November. With today's close, we slightly broke that uptrend, so we have now closed beneath that uptrend line. Not horribly so, but technically we did close beneath it today. So we've lost our momentum in the Dow, and we closed just underneath this 30,000 level. So we'll have to see over the next couple of days, just like with the S&P 500, you know, is that 30,000 level, now that we've closed beneath it again, just barely, but beneath it all the same, from a psychological standpoint, how much does that affect investors and traders in this particular index? Only time will tell. But again, we've lost some momentum in these markets, so just keep that in mind over the next couple of days. The next chart that we're going to look at is for the Triple Qs. Of course, the Triple Q is the ETF that tracks the NASDAQ 100 index. The Triple Q was up 38 basis points today and closed at 302.45. Now, one of the reasons why it's so important to understand where the Triple Q closed today is because we barely closed above the high that we set back on September 2nd, well over 3 months ago. So we closed just barely above the September 2nd close, which of course was 302.32. Again, today we closed at 302.45. So for over 3 months, the Triple Qs have been basically grinding sideways with some volatility. Okay, so yesterday we broke this nice uptrend that had been intact for 11 days. We had 11 positive days in a row on the Triple Qs, which that was the first time this year, this calendar year, that had happened. I think you have to go back to December of 19 to find a similar pattern there where you get at least 11 trading days in a row that are positive on the Triple Qs. And the volume was modest on those up days, not horrible, but modest. And you can see here that on yesterday's down day, we had a high volume spike as the Triple Qs sold off over 2% yesterday and came down and kissed that 300 line, as you can see here. Today, we started off below the 300 line, but then we're able to grind our way to a positive 38 basis points for the day. So Again, just like everything else we're looking at today, we've broken the uptrend, but we're staying above or right around some of these key psychological levels. In this case, it's 300 on the triple Qs, 30,000 on the Dow, and 3,600 on the S&P 500. So as long as each one of these indices or investments stays right around or above their key psychological level, I think we're probably going to be okay. But if you see any of these investments that we've talked about today start to close beneath their psychological support level, that in and of itself will let you know that the overall market environment is continuing to weaken. Do you know the level of risk in the stock market on an ongoing basis? Simple Market Signals. It's like having risk radar for the U.S. stock market. Simple Market Signals is less than $20 per month. Simple Market Signals is for financial professionals and individual investors. What is it costing you to not have this information? To get started, go to simplemarketsignals.com.